नमस्कार दर्शक बंधु मु मानस स्वागत करुच्ची आपनकु आपनक प्रिय यूट्यूब चैनल ऑल इज वेल को। बंधु आज टॉपिक बहुत इंपोर्टेंट होगा जाऊँगी तेणु वीडियो स्किप न करी संपूर्ण देखंतु। आज टॉपिक रे हमें सरेंडर एंड सरेंडर बेनिफिट्स इन यूलिप प्लान, स्विचेस इन यूलिप प्लान, सिस्टमेटिक इन्वेस्टमेंट, रुपी कॉस्ट एवरेज, टाइप ऑफ चार्जेस यही सब टॉपिक विषय डिस्कस करियो। तेबे आगो बढ़िया पूर्व चैनल को सब्सक्राइब कर दियंतु और बेल आइकन को मध्य प्रेस कर दियंतु। फर्स्ट रे आसुची सरेंडर एंड सरेंडर बेनिफिट्स इन यूलिप प्लान्स। The policy may be surrendered at any time during the policy term. Before the lock-in period 5 years, unit fund value on surrender less the discontinuous charges as specified in the schedule of charges will be removed to the discontinued policy fund. The amount allocated to the discontinued policy fund will accrue interest which will be paid out on the completion of the lock-in period. In case of death of the life assured before the payment of the surrender benefits, the amount in the discontinued policy fund will be paid out immediately. If the policyholder surrenders the policy after completion of 5 years from the policy commencement, the fund value will be paid out immediately. Upon payment of this benefit, the policy terminates and no further benefits are applicable. तेबे एथिरो आमे जानिबा पाइलु फर्स्ट पॉलिसी टर्म रो जे कोनोसी समय रे आमे पॉलिसी सरेंडर करि परिबा। सेकंड रे यूलिप प्लान रे जदि आम फंड वैल्यू डिस्कंटिन्यूड फंड रे अछि तेबे लॉक इन पीरियड रो कंप्लीशन परे विथ इंटरेस्ट एहा हमकु मिली थाए। थर्ड रे लाइफ एसेट रो डेथ केस रे फंड वैल्यू डिस्कंटिन्यूड फंड रे थिले मध्य एहा इमीडिएट रिलीज होय थाए। नेक्स्ट आसुची स्विच। Switch is a facility that allows a policyholder to shift funds from an existing fund to another of his choice, either partially or fully subject to the applicable charges. The policyholder will have to specify the proportion of the total investment to be held in each available fund after the switch. नेक्स्ट आसूची सिस्टमेटिक इन्वेस्टमेंट प्लान और रुपी कॉस्ट एवरेजिंग। SIP is a method of investing a fixed sum regularly. The sum invested regularly over a longer duration takes advantage of market volatility to average out of the cost. SIP allows one to buy units on a given date each month, so that one can implement a saving plan for themselves oneself. The biggest advantage of SIP is that one need not time the market. Rather than timing the market, investing every month will ensure that one is invested at the high and low and make the best out of an opportunity that could be tough to predict in advance. And the last and very important topic is type of charges. ULIPs offered by insurance companies have varying charge structure. A portion of the premium is utilized for purchasing units after deducting all the charges and the premium for risk cover. Typically, the different type of fees and charges are: 1. Premium allocation charge. This is a premium based charge. After deducting this charge from the premium, the remainder is invested to buy units. The remaining percentage of the premium that is invested to buy units is called the premium allocation rate. This charge is levied towards recovering the initial cost of procuring the policy and hence includes charges like commission expenses, underwriting, medical costs, etc. Next is fund management charges. These are the charges levied for management of the fund and are deducted before arriving at the net asset value or NAV on a daily basis. This charge is levied at the time of computation of NAV. Amongst all charges, this charge generally has a maximum impact on the growth of fund value. Next, policy administration charge. These are the charges for administration of an insurance plan and levied by cancellation of units on monthly basis. This could be flat throughout the policy term or vary at a predetermined rate. All admin related charges incurred by insurer like cost incurred towards providing premium reminder to policyholder, sending policy statement cost, etc. are recovered through these charges. Mortality charge, risk benefit charges. These are the charges to provide for the cost of insurance covered under the plan. It is the cost of providing the death benefit, extra health benefit and extra life benefit if applicable on a policy. It is levied on monthly basis by deducting the units. Mortality charges depends on a number of factors such as age, amount of coverage, stage of health, etc. Next, service tax deduction. Before allotment of the units, service tax is deducted from the tax portion of the premium.